Good morning. Welcome to Stock Market Today. It's Monday, June 22nd, 2020. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Hope everybody had a great weekend. As always, Stock Market Today brought to you by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where I get a lot of the content for this show, as well as give you daily stock ideas to consider that hits your inbox every trading day before the market opens. So U.S. equities were mostly lower, but off the worst levels in volatile Fridays trading. The NASDAQ was the only major average to finish higher on the day. All sectors were lower on the day except for healthcare. Treasuries were stronger at the front end, little changed at the back end of the curve. The dollar was mixed on the major crosses. Gold finished up 1.3%. WTI crude oil ended the day up about 2.3–2.5%. And as we get going on a Monday morning, futures are up 80 basis points, and that is a reversal of some earlier weakness, especially in the overnight session last night. That was fun, obviously on the heels of a rebound week last week. Asian markets were relatively mixed overnight. Hong Kong and South Korea underperforming, Australia and Taiwan leading to the upside. European markets are mostly higher as well. Treasuries are unchanged. The dollar is stronger on the yen, but weaker against the euro and sterling. Gold is up 50 basis points, and WTI is slightly stronger to kick us off for a new week on a Monday morning that we enter with gaps above and support below is kind of the way that I see the S&P 500 right now. 3,000 to 3,100 remains support. Below that, 2,850 to 2,950. February highs are in play if support holds. Now, in the near term, what I see is resistance kind of in this 3,200 to 3,250 area. That's this island reversal here. This is the island reversal that bulls want to see close quickly. Bears will anchor to this in the near term. After this strong run, we have a gap higher, some consolidation, and then a gap lower, leaving what looks like an island in the stream here. You also have a gap here from the February area that started the initial downturn on COVID or coronavirus fears. So that's resistance to me in the near term. We are oversold based on the CCI 13 and the 3-day moving average of that metric. Chaikin money flow does remain bullish. So for me, I guess in the near term, I would call risk reward, purely from an S&P 500 perspective, is relatively balanced. Right? You enter the week at about 3090. You have downside to 3,000. You have upside to 3,200. That's a fairly balanced view in my terms. I think I'd rather buy strength going through 3,200, 3,250, and I'd rather sell weakness going through 3,000. If I was going to frame it up, I think in here in the middle, it's a relatively balanced scenario. I wrote about that over the weekend in our notes for Chaikin Analytics clients, and I touch on it again today in my morning note for clients as well. So that's kind of how I frame up the S&P 500 as we enter a new week. And what am I writing about in my note today? Well, I just touched on part of it. SPY enters the week with a balanced risk reward in the near term. Treasuries remain strong, and I have to wonder if investors are just buying what the Fed is buying. Commodities are basing, and I wonder if a breakout signals that inflation is coming. And we've been hearing for a long time about how the Federal Reserve's money printing is going to lead to inflation. So far, that inflation that everybody's expecting has eluded investors. However, now with fiscal stimulus on top of the monetary stimulus, the odds do kind of skew towards the potential for inflation. Is it coming? Well, we're watching commodities to figure that one out. In particular, or in addition, right, the dollar continues to hold the uptrend. So it'd be an interesting dynamic if the dollar breaks down as commodities break out. And what does that mean for equity markets? I think it's going to be important. It's something I'll be paying a lot of attention to going forward. Futures point to a higher open today. Taking a look at the major indices now from a power bar perspective, Dow 3 to 11 bulls to bears after losing 80 basis points yesterday. Small caps in line with the S&P 500. S&P 500 down 60. Still a bearish ratio for the small caps. NASDAQ flat on the day, bullish ratio. Small caps down 56 pips, bullish ratio. Bonds uptick, sending yields lower. According to the Chaikin Power Bar, small cap stocks remain somewhat more bullish than large cap stocks, and the major markets are mixed. Although I will note is from a relative standpoint, we're starting to see small caps fade again. We've touched on that late last week. We'll continue to monitor that situation as well. So it's interesting that the rotation trade, may not be cut and dry, right? We could see maybe growth continuing to outperform value in a slowing growth world, but some of the cyclical areas levered to inflation start to pick up. It's interesting. I think there's going to be there are a lot of moving parts here. I think it's going to be an interesting game to watch, see how it unfolds. We're obviously going to try to get on the right side of it, but we're paying close attention to the shifts that are playing out in the marketplace currently, as we always do. Now, our stock of the day, Freeport-McMoRan. Speaking of, FCX has a bullish rating. Strong trend, strong industry group as it's trading above that rising long-term trend line. Overbought, oversold indicator now in an oversold condition as we have the potential for personality change here as the relative strength turns positive shortly after the rating turning bullish. Chaikin earning flow turning bullish as well. So this is an interesting setup here. Rally, consolidation. We'll see how it breaks, but I think that there's a compelling case to be made for further upside in Freeport-McMoRan. I mean, I think at the very least, you could be playing for the highs here. It's but stock that I'm highlighting in my note today to clients. I think it's an interesting name. I think that if this inflation type shift to material stocks plays out or continues to play out, Freeport-McMoRan can continue to do well here. I think it makes sense to pay attention to what's happening with FCX. I think if you're looking for some bullish exposure to the group, I think it makes a ton of sense to be looking at a name like Freeport-McMoRan. I'm featuring it in my note today to Chaikin Analytics clients. Turning now to our sector tracker. Movement of the major sectors over the last 5 days. Healthcare, top of the list, strong last week. Rebound late in the week was the only sector to finish higher on the day on Friday. Tech continues to improve, and that's a positive sign for bulls. Comms as well. So, right, again, a lot of this rotation back and forth. Right, I do think growth continues to be the area of the market that should be an overweight, but I think we do have to selectively start paying attention to areas like materials, which could benefit from inflation. Discretionary industrials, fins, middle of the road, REITs, energy, utilities, the only three sectors lower over the past 5 days of trading. So a lot of the shifts playing out. I do think that materials is, you've heard me talk about it, and materials is kind of an interesting area to me right now. It's something that I'm paying close attention to. Industrially in focus, or the industry in focus today, retail services, which surprisingly over the past 6 months has only underperformed the S&P 500 by about 4.25%. However, its power bar ratio, which measures future potential, is strong. 22 bullish or very bullish stocks for 17 bearish or very bearish stocks. It's currently middle of the road, ranked number 10 of 21 subsectors, and has moved up one slot over the past week. So some names there that might be interesting, that might warrant further analysis. Big Lots, BIG, has a very bullish rating. Office Depot, ODP, with a very bullish rating. And Dollar Tree, DLTR, with a very bullish rating, as members of a fund that have had a nice rebound, have gone into a consolidation. Looks very much like the S&P 500, actually. Bullish fund for XRT, 22 to 17, bulls to bears, and a strong trend above a rising long-term trend line. Bullish money flow oversold. Look at the outperformance picking up since May and intensifying as we go forward. And what's interesting here is XRT is equal weight, right? So this is not a situation where you can just point to Amazon and say, well, it's Amazon. No, it's actually some improvement here. We'll see. Now, there's a lot of work to do, right? We're now into this consolidation zone, and we'll see how it plays out. But something that definitely warrants some attention here in the near term. Taking a look at what's trending now, yesterday's or Friday's S&P 500 movers and shakers. INSEE, positive sell-side comments, sent that stock higher by 8.25%. Regeneron, Sanofi announced some positive results on a drug on which Regeneron is entitled to royalties. So Regeneron up 7.8% yesterday. WBA, nothing really company specific to drive trading there, up 5%. Again, healthcare, these are all healthcare stocks, right? Healthcare was the only sector to finish higher on the day on Friday. Vertex, healthcare and biotech were strong on the day. Vertex goes along for the ride in that regard. And Cerner, CERN, healthcare tech play, up nearly 5%. Nothing company specific driving the trading in that stock. On the loser side of the board, VTR cut their dividend. Remember, this is one of those senior living facilities hard hit by COVID-19. A REIT play, right? People, this is why I say you can't just blindly turn to REITs, right? You have to pay attention to what they do if you want to be defensive or if you want to generate income, because they cut their dividend and the stock's down 9%. And one of its peers, Welltower, also in the assisted and senior living facility space, down 8.6%. I'm thinking in sympathy with VTR. I didn't see anything company specific on Welltower. L Brands down 7.25%. Nothing company specific there. Royal Caribbean, all of the cruise lines announced that they are suspending trips from the U.S. until September 15th. I don't know if that's new news or not, but it took 6.75% out of Royal. And United Airlines talking about a $5 billion facility to shore up their balance sheet. Stock down 6.3% on the day on Friday. Let's take a look at the charts now. Treasuries remain bid, right? There's still a sense or a flight to safety out there. Here's the IEF, the iShares 7 to 10 year Treasury bond ETF. What I see here is, obviously the massive flight to fear. Fear, flight to safety, right? And then some volatility, and then steady eddy within the context of this consolidation, right? So this to me looks like a consolidation within an uptrend. I would not be surprised to see an upside resolution to this consolidation. I've said it before. I do not think that we've seen the low in rates. Would be interesting to see how this plays out if we are starting to, in fact, see inflation. But I don't, it's early days and things that I'm just paying attention to. I don't think we've seen the low in rates. I wouldn't be surprised to see IEF break topside from this consolidation. In the near term, we're closer to overbought than we are to oversold based on that 13-period CCI. But Chaikin money flow, solidly bullish here in the near term. So I do think, you still have this bifurcated market situation where I think it makes sense in the equity landscape to be paying attention to growth. But if you're running a diversified portfolio, you're definitely going to want to have, or at least in my opinion, you're going to want to have exposure to treasuries. I think treasuries are going to break topside. Remember, you're not there for the yield, right? I think you're there for, number one, the fact that it's relatively uncorrelated to equities. And number two, you could get some price appreciation. Commodities on the verge of a breakout. I think 1250 is the key level to watch. Right. And I guess if you wanted to, you can call it a zone, because 1263 is the 38.2% retracement of the move lower. Double bottom here. Look at this, 1050 to 12 bucks. Right, that's $1.50 of upside. 12 bucks targets 1350. That would be a roughly 50% retracement of the move and would keep you below the 200-day moving average. But what's interesting to me, right? Test to the bottom here, higher, right? Higher high on the RSI. We call that a bullish divergence on this breakout, right? And now a potential shift in the RSI into a bullish range for DBC. This is very interesting to me, right? So potential upside. So if you're traded just on the ETFs, I think you can play for upside to 1350 in the commodity complex, DBC being the ETF that you would look at, right? And sort of see a small uptick relative to the S&P 500. So this is certainly interesting, right? Hard to say if this is simply just a counter trend rally within the context of a bigger picture downtrend, but potentially an inflection point here for commodities. I think it makes sense to be paying attention to it very closely, especially if 26 gives way on UUP, right? Because then you have a weaker dollar, which becomes a tailwind for the commodity complex, right? Which you can see here. Notice that dollar strength starting in 2018 largely coincided with a topping process in commodities and then a move lower. Now we're starting to see some dollar weakness coinciding with commodity strength. I think that these are some shifts in the marketplace that we're going to want to pay close attention to. That'll wrap us for today. Take us for a test drive. ChakinAnalytics.com/test drive. I'll be back tomorrow.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.